All right, Brian, we are live. Welcome back to the show.
Well, it's great to be back on. I guess it's been a few months now since our first chat that we've seen each other in person in between.
Right, right. And Marcus, you said there that I was muted. Just let us know in the chat there for all good. I think we are now. But yeah, Brian, it's great to have you back. I think, when we first had you on the show, we were just getting started. As you can see, things have changed. All clear now. Thank you, Marcus. We're now moving into doing some live episodes. So thanks for being our first guest and kicking off this weekly series where we'll be having you on. Excited for it.
Yeah, I think it's great. There's a lot happening in the space, and as you and I have discussed, sometimes it's if you record a show and it gets published a few weeks later, sometimes the information is not as up to date as you would like. So it's always great to be able to talk about things in a more real time kind of way.
Absolutely. And Brian, maybe just to tee things up for the conversation, it's been got another guest there. Maybe just to tee things up for the conversation here. Like we said, it's been a couple months. We know that a week in Bitcoin can feel like a few months. You've been up to some very interesting things since we met in that May timeframe. Can you walk us through what you've been up to, how things are going, and overall how you're doing and dealing with the current climate?
Sure. I think at the time of our first interview, I don't think I had joined H100 yet at the time. I think I was still independent. But since then, I've joined H100 Group as head of Bitcoin strategy. We are the first and largest Bitcoin treasury company in Sweden, also the largest in the Nordics, number 7 in Europe, number 49 in the world. From the beginning of the strategy, the company went public with a reverse takeover on May 22nd of this year. Went from a first purchase of 4.39 Bitcoin to 1,046 Bitcoin in the space of 104 days. So pretty good start to the Treasury strategy. Past few months, all around the Treasury space have been more challenging, but we continue to build, work behind the scenes, and to keep moving forward with various projects. And we're building for the long term. Volatility is part of the space, and volatility comes in both directions. But that's why you need Bitcoiners on teams who understand how the game is played, and to keep the train moving forward under all conditions.
Yeah, and as you mentioned, you guys over at H100 got off to a pretty fast start. What would you attribute to that? I know some BTC treasury companies have struggled to accumulate or haven't really put out a clear strategy. But you guys got off to a pretty quick start and have shown some consistency. So what would you attribute to that?
So one of the things that is unique about H100 is that one of other Sanders companies, Sanders, our founder, he also founded a company called FinPeers, which is kind of like a sister company to H100. And what that company is basically a network of family offices that do Bitcoin-related private equity deals. And that company has essentially been repurposed as almost a full-time investor introducer for H100. And so the company, H100 wasn't just a random company that said, let's buy some Bitcoin. It was a company that already had some ties to the space through its founder, and it was built on top of a pre-existing capital raising engine. So that was really what allowed us to get out of the gate so quickly. We also had some prominent backers, Adam Back, who needs no introduction in the Bitcoin space, is one of our earliest investors and earliest and largest investors, and also provided some early introductions. And so, it's a combination of those factors is what really allowed us to get out of the gate as quickly as we did.
Gotcha. Okay, well, Brian, thanks so much for that introduction and for catching us up to what you guys and what you have been up to. Just want to quickly go over the agenda here. We're going to cover BTC Treasury, what's going on in this space right now, the sentiment right now in the environment. We're also going to talk about the different tools available to Treasury companies in terms of how they finance their Bitcoin purchases. We'll touch on MSTR preferred stock that they've been issuing, potential share buybacks, and if we have some time, we'll also hit on the macro climate as well as what it means that Bitcoin is now trading below 100K. So stick around, but let's hop into it, Brian. In terms of Bitcoin Treasury sentiment, it's perhaps its lowest that we've seen in a while, maybe since 2022 or 2023, right? A huge part of that sentiment around these companies, I think, is directly tied to Bitcoin itself. We've seen Bitcoin come down. But separate from that, the sentiment in the Treasury space as a standalone entity is also wailing right now. We've seen over the past years, many of these Treasury companies have actually decoupled from Bitcoin at different points in both price and sentiment. So at times we've seen MicroStrategy, for example, trade at a 2x MNAV, a 3x MNAV. But today it's currently trading at a 1.25 MNAV. Metaplanet had traded up to a 10x MNAV. Today it's at a 0.83 MNAV. And you can go down the list and you'd see sort of this dispersion and decoupling from Bitcoin's price. So I guess the point I'm trying to make is there's Bitcoin sentiment. There's also BTC Treasury company sentiment. Sentiment is not good at the moment, to say the least. And I think this lines up pretty closely with the broader sentiment in Bitcoin right now. So would like you to help us kind of understand a little better what's going on right now and what you see potentially happening, as we move through the end of Q4 and into next year. So right now, what is this discrepancy that we're seeing between the price of Bitcoin and, even worse sentiment in the Bitcoin Treasury space signal to you?
Well, I think it just goes back to fundamentals. Bitcoin Treasury company is amplified Bitcoin, and whatever. So you can think about whatever the sentiment is in Bitcoin, whatever the sentiment in Bitcoin Treasuries is going to be that magnified. And I think we're just seeing things come back the other direction right now. There was, extremely hot period in June of this year, and now we're going through a low period. But again, I think really it's more mirroring what's happening in Bitcoin and amplifying it more so than it is kind of its own animal. And I've been keeping, I keep a pretty close eye on the pulse of the market, and I do see some signs that sentiment could be leveling off. I do reserve judgment on that a little bit because we have seen Bitcoin come down further since my initial observations. But nonetheless, there are still some signs, I think, that its sentiment could be, leveling off in the near term. And some of the things that we've seen prominent influencer exits. Usually when you see that is, some of the final impulses of a capitulation. And some of the other things I've seen, the MNAV compression, earlier in the year, you saw MNAVs 5, 10x, 20x, extremely high. And now they're kind of converging around 1. Some are dipping a little bit below 1. But that extremely fast compression of MNAV that we've seen over the past few months is slowing down. And in some cases, mostly stalled. And that's a sign that, and also in tandem with that, we've seen a lot of that compression was, just blow off tops, working their way through what happens after blow off tops. But also we saw prominent investors in the space, like Jim Chanos, putting on his long Bitcoin short strategy trade. And whenever someone, big and public like that does that and goes out and promotes it every day, a lot of people just copy that trade. They don't know anything about Bitcoin. They don't know anything about strategy. They're just copying, the hot trade of the day. And so we saw that, I think that affected not only strategy, but other companies as well, because it was seen as this is a class of company to put the trade on. And recently that trade was unwound. Jim Chanos publicly came out and said he unwound his trade and advised those that he advises to do the same. And also in that same week, one of our most active community members said that he saw, in Sweden, there are these H100 mini futures you can buy through the Nordea Bank. He saw that a lot of the quotes were pulled from that following the announcement that Jim Chanos wound up his trade. So I think we're seeing a knock-on effects across the industry that that trade is winding down. And so, these are all signs to me that at least the negative momentum in the space particularly in terms of sentiment, might be coming to a leveling off point. And there are some other things that I've been noticing as well. That's alongside that, people who are Bitcoin savvy investors, who are I would call them value investors, people who looked at Bitcoin Treasury companies at 5x and 10x valuations and said no. I've seen a number of them and talked to a number of them who said, at the current valuations, these Bitcoin Treasury companies, they look like ETFs with a call option on management upside. And so, a lot of those types of players are the ones who are entering the space right now. And I think it's, again, indicative of, a flip in sentiment. And probably the last thing I would want to highlight is that we saw an article in the Wall Street Journal recently, talking about the sell-off in Bitcoin treasuries. And usually by the time mainstream media reports something, you're already fairly late in the trend. So all these signs point to me that this trend of worsening sentiment is leveling off, and could potentially be getting ready for reversal. So
okay, Brian. Yeah. Please
pause there and let you react to that.
Sure. I mean, you said quite a few interesting things there, and I'm glad you brought up Jim Chanos and the trade that was put on. To me, it looked like over the summer months that essentially there's a strong effort by short sellers to really close that premium gap on the Treasury play. And like you mentioned, they pretty much got, they have all of these companies in terms of their MNAVs trading close to one or below one. So the trade doesn't really make sense at this point. But I'm curious, now that we're talking about potential sentiment shift, if we do start to see multiples expand again, is that a concern that you think managements at these companies or investors in these companies should have, in terms of these short sellers just coming right back and putting on the same trade to close the gap? How would you think about that?
Well, when these trades were put on, the MNAVs are much higher. These trades were put on at 5x, 10x, 3x, much higher multiples than they're at now. And I can't speak for the investment managers, but I tend to think that if you're a hedge fund, you're entering a trade like that, you're looking for a wide margin for error. You're not looking for a 10 to 20% spread that you can capture with the tail risk that Bitcoin goes ballistic and you get your brains blown out with volatility to the upside. That's not I think in the eyes of a hedge fund manager, that's not a trade that looks like a safe bet. But again, I can speak for them. So I don't personally see that type of interest coming back to the trade if MNAVs were to gradually float back up. Again, these trades were put on when MNAVs were trading mania highs, and if that's where the interest came in, then it's hard for me to see that level of interest coming back to that type of a trade unless MNAVs go back to mania highs. And there's room in the middle for MNAVs to expand without creating a kind of mania high target on it.
Gotcha. And two other follow-ups here, just so we could get a clear understanding of this. How long do you think the current dynamic will last in terms of the sort of muted or negative sentiment? And then also, do you think it'll necessarily take a rebound in Bitcoin sentiment for there to be a shift in Bitcoin treasury land? Or is there something that any one of these companies can do to sort of reignite investor excitement and that enthusiasm that we saw throughout the spring and the summer?
Well, I think fundamentally Bitcoin treasury companies are tied to Bitcoin. It's very difficult to have a whole lot of excitement around treasuries if there's not at least some level of excitement around Bitcoin. So I do think the turnaround in Bitcoin is needed to bring similar levels of excitement back to the space. What is going to bring excitement back to Bitcoin? I think really goes back to looking at more of the global macro picture and liquidity. Bitcoin fundamentally is a long money printer, and what we've seen in Bitcoin recently, or what we've seen in terms of liquidity recently has been fairly tight. Over in July, the U.S. resolved yet another instance of pretending like they were going to cap the debt, and then the debt ceiling always gets increased. And so one of the things that happens around a debt ceiling increase is that the Treasury general account, which is essentially where the government keeps the money it's going to spend, the Treasury spends the money down until the debt ceiling gets resolved. After the debt ceiling gets resolved, then they refill the TGA, which sucks liquidity out of the system. You get this dynamic where you get increasing liquidity into the debt ceiling increase and then decreasing liquidity out of it. So, that in parallel with the U.S. government shutdown that we had recently, the longest in history, 43 days, I believe it was. Analysts estimate that between those two occurrences, that it sucked somewhere around $700 billion of liquidity out of the system. So, we've got a situation where, liquidity was, decreased. We're still at, relatively elevated interest rates compared to where we've been in prior years. And I think the combination of just the tightness, QT is still ongoing, scheduled to end in December. The combination of this tightness in markets, I think, is really what's weighing on Bitcoin. But these are all trends that are reversing. The TGA refill is mostly done. The government's shutdown has been resolved. QT is ending in December. We're not quite at full tilt money printer yet, but we're in a turnaround situation. The boat is slowly changing course. And also we have a new Fed chair coming next year. So, all of these things, line up for, another liquidity fueled movement in markets. But, the market doesn't turn on a dime. It takes time for all these pieces to line up and to move things.
Right, that's fair. And we'll circle back a bit more on the macro as well, but wanted to do a shift over to these financing tools available to Treasury companies. There's this whole debate about how much ATM usage is too much, what's too little, what's just enough. Should management give guidance? Should that guidance be respected when it's given? You wrote an interesting post on X highlighting the various tools available to Treasury companies. As the head of a Bitcoin Treasury company, can you walk us through how you think about those different tools and maybe use some extreme examples as well as normal conditions to give us concrete examples of this? So, for instance, at a time like now when sentiment is not good, what's most accretive for Bitcoin per share?
So, what's always most accretive for Bitcoin per share is if you have revenue that you can buy Bitcoin with absolutely no debt attached to it. But I don't want to speak too specifically about what HM100 might do, because that legally that enters adult areas that I can't really touch on. But what I can do is talk about these instruments, in general, and what application they have, what some of the trade-offs are. The post I wrote about is essentially I did a breakdown of all different tools that Bitcoin Treasury companies have used or commonly used for fundraising, and what some of the trade-offs are. Because I think that what is not really recognized is that you can't just go out and take on debt because the schedule says it's time to do the weekly Bitcoin buy. It just doesn't work like that. Whenever you take on debt, that has long-term consequences. If it's a convertible bond, you could be tied to that for 5 years. If it's a preferred share, you're paying that dividend forever. Unless you decide to do a buyback, which I think probably will ultimately be the fate of Strategy's preferred shares. Not today, maybe 10, 20 years down the road. Or if you have a line of credit. A lot of these, people saying, well, why don't you use one of these credit facilities out there? Those are available, but what's the terms typically available on them, the interest rates are not favorable. You're typically paying 8% or more interest. It's typically a 1-year term or less. Some of them are like 4-month terms. And so each of these instruments they have trade-offs. And if you're going to have debt termed out, a year from now, 4 months from now, a year from now, 5 years from now, you really need to have a perspective on what you think is going to be happening with Bitcoin, And Bitcoin Treasury companies tend to gravitate towards longer term instruments because with what historically has been 100 vol asset, but currently is more like 40 vol. If you buy Bitcoin today, and that 40 vol or that 100 vol happens in the opposite direction the next year, and your debt comes due the next year, well, you've got a problem. But is the common figure that Bitcoiners like to cite? Anyone who's sold Bitcoin for at least 4 years has not lost money. If you have your debt termed out for more than 4 years, then there's a pretty good chance that financing is going to work out favorably for shareholders. If you're going to do that, if you're going to take on that long-term debt, then you better make damn well sure that you've got good terms on it, because you can only issue so much of it. You can't issue infinite debt to buy Bitcoin with. Strategy historically has had target leverage ratio of 20 to 30%. So if you've got 20 to 30% to work with, then you're going to get the best terms you could possibly get for your shareholders, and that's what's in their best interest. So that's a bit of a mouthful. Maybe any questions on it so far?
Yeah, I mean, you mentioned something really interesting there at the beginning, sort of tongue in cheek. But if we all think over the long term, Bitcoin's going to be a really solid performing asset, the best way to play it is likely conservatively. Park cash there over time. Like you said, the best way to probably do it for a company is revenue, no debt. And if that's the case, why do you think we haven't seen more of these treasury companies either try to create or acquire cash flowing businesses to be able to use that as cash to put into Bitcoin? Or why haven't we seen more already cash flowing businesses turn into treasury companies to use the system the same way? Traditionally, we've seen companies that have been referred to as zombie companies, meaning they don't have any cash flow, and they're sort of using they're shifting to this new strategy. So why do you think we haven't seen more of this actually cash flow generating businesses that can use that to park into Bitcoin as a way of running their treasury strategy?
Yeah, and there's trade-offs there as well. I mean, the more that the cash flow of the business accounts for the valuation of the business, the less it trades like a Bitcoin proxy. So to some extent, cash flow is actually a drag on the company trade, on the volatility of the company, which impacts other fundraising strategies. So there's something of an optimization problem, and also typically is the stack of Bitcoin grows larger, and as the valuation for the Bitcoin grows larger, almost inevitably the cash flowing part of the business gets smaller and smaller in relation to the size of the balance sheet. If you've got a balance sheet that is increasing at 30% per year, just because of the value of the underlying asset, or Bitcoin has a 5-year CAGR of more like 50%. If you've held an asset for the past 5 years that went up on average 50%, and you're trying to grow cash flow, and not only that, but you've been buying Bitcoin, so the cumulative increase in the size of the balance sheet isn't just that 50% CAGR; it's the 50% CAGR plus all of the additional Bitcoin you've acquired in that time. That is a big ask for any cash flowing business to keep up proportionately with that pace. So there's just challenges scaling a cash business alongside it. Two, just inevitably that the Bitcoin stack grows larger, and not only that, but you kind of want that Bitcoin stack to be larger, because if the premise is your company is an amplified Bitcoin stock, then it needs to trade like amplified Bitcoin, which it won't do if the cash flow is disproportionate in relation to the Bitcoin holdings. So I think probably the optimum point is it really depends on what kind of debt service obligations you have. If all you do is zero coupon convertible bonds, that the cash flow is less important. If you have preferred stocks with dividends coming due every year, and you're in a bear market year where there's your stock's trading at a discount to NAV, well, that's a little bit more of a challenge. Cash flow is a little bit helpful there, but there are potentially other levers you can pull to to pay the dividends. So I think that, there's many different factors that go into it.
Okay. And related to the financial tools available to Treasury companies, I wanted to also talk about MSTR's preferred products. And this has sort of become the North Star for Treasury companies more broadly. Strategy has obviously released several of these preferred securities this year. I think maybe the interesting ones to cover here, or at least talk about first, are number one, STRE. That's their newest and first international preferred. It's available to qualified professional investors in the US, the EU, the UK. It's currently designed to pay a 10% annual dividend. This is paid quarterly, and Strategy has some flexibility around the dividend payments, but there are strong protections in place to ensure that holders of the security are protected against any missed payments. So some of the questions I wanted to ask around this, with Strategy now releasing preferred products targeted at international customer, how does this change, if at all, the long-term case and narrative for needing a dominant Bitcoin treasury company in each capital market?
I still think that the narrative makes sense. There's not just going to be one player in every market. All else equal, people, generally given, roughly equivalent offerings, there's going to be home market bias where people would just prefer to have the local offering. Strategy also, they are registering, preferred shares in these other markets, but the common equity is still, the U.S. equity. So I think there is still, and there are, there are funds with mandates that can only invest in local companies. If you're a pension fund and you're only allowed to buy local issuers, depending on that mandate, you still might not have access to, STRE or whatever Strategy launches in other markets. So I think that, the case is still there. And, especially if you're not in one of the major markets, Strategy, they're probably going to go top down, in terms of major currencies, launch in, obviously, Europe was the first one they did with euros. But, other countries in Europe, is Strategy going to launch, a Swedish kroner version of Stretch someday? I don't know. It's probably, not top of the list in terms of going after largest currencies. And there are other, barriers to entry. Michael Saylor said, we wanted to enter Japan, but we couldn't do it. We ran into obstacles, got delayed. So, by the time, if they ever launch a product in Japan, Metaplanet will probably already be well ahead of them. So I think, between, mandates to only buy local issuers, other barriers to enter for local companies, and just the fact that it may not even make sense for Strategy to work its way all the way down through the currency list. I think there's still a strong case for a local Bitcoin treasury company in each jurisdiction that can soak up some of the demand for these types of Bitcoin proxies and fixed income instruments that Strategy is unable to service.
Yeah, you're definitely right there. There are some real regional barriers to entry there. So the companies that already exist in those markets will likely have good enough good amount of time to keep going there and building out their product lines, building out their business, and sort of keeping a Strategy out for now. There are other product that's really interesting in terms of preferred securities is STRC. This is geared more toward retail investors. It's also designed to pay out a 10% dividend. One concern, and this quite a few people were talking about this online the other day, was STRC was actually down about 4% in one day, just the other day. I'm wondering from your end, is this concerning? It's been sort of marketed as it's supposed to be like a money market fund, but as we know, money market funds don't behave like that. So what was your view on this? And is it just some early growing pains and something that you think is just a short-term hurdle? How are you viewing this?
Well, I think we're in month 3 or month 4, I think, of Stretch being released. And one thing that I think is inescapable about it is that, it is not a bond, it's not a money market fund, it's an equity. And one thing that you always see with dividend yielding equities is they tend to have a dip right after the ex-dividend date. So, if you look at, the chart for a dividend yielding stock, there's typically a little dip on the ex-dividend date, and then it recovers, then it, repeats for every dividend date. Every dividend investor who starts thinks, I'm just going to go around, I'm going to clip all the coupons, I'm just going to buy the day before and sell the day after, get the dividend and rotate. And they quickly find out that doesn't work because of this pattern that I just described. So I do think that it will continue to act like an equity. Whether I think that probably the 4% dip, the 5% dip is more than the size of the dividend, which is everyone gleefully pointed out. So I think there's still some work to do that strategy can do to stabilize it more. What exactly it will do, remains to be seen. But it's still a new product. There are still some kinks to work out. For what it's done so far, I think it's off to a great start. That did close to par. One of the things that happens when they launch these instruments is they're typically launched at a discount. So the initial, in this case, I think the IPO is $2 billion for Stretch. Most of those initial buyers are probably people just looking to, collect the spread between the discounted price and par. So, over the first few months, what happens is that the investors who just bought it to, collect the quick 10% will rotate out. And, it takes a while for that shareholder base to turn over and for the real long-term holders to come on board. It also takes a while for all the first-time folks who think they're just going to, do a dividend clipping strategy to figure out that doesn't work. I would be surprised if there was a lot of leverage on the stock headed into the dividend date, and then when that unwinds, that exacerbates things. There are other things happening in the market as well. If Treasury rates change, that's also going to impact what happens with Stretch. So it's I think strategy will do the best they can to make it stable, but it's still a work in progress. I don't think that I'm too concerned about that 5% dip. I think it's still a work in progress, and they will continue to explore ways to make the stable component of that, make the principal more stable over time.
Okay. And I think there's a really interesting angle here related to AI. Currently, within the AI narrative, there's this reference to circularity right now. So, Microsoft invests billions into Anthropic. Anthropic will commit billions into Azure, which Microsoft owns. And then NVIDIA, is also involved in the deal and supplies everyone within the ecosystem with GPUs. One can make the case that the current design of preferreds within Treasury companies also creates, circularity that could concern investors. So Treasury companies, issue preferreds, right? They register at the market offerings for that preferred. They use the proceeds to purchase Bitcoin. And then they have an ATM on the company's stock to pay the dividends on the preferreds. So how does a Treasury company ensure that this doesn't get out of hand, or that the circular nature of this doesn't break down at any one given point?
Well, I think one thing that's important to keep in mind is that it's not purely a circular closed system. Behind all this, there's a Bitcoin treasury, and if the Bitcoin thesis plays out, that Bitcoin treasury is increasing in value. And all the operations taking place are fundamentally anchored to what is happening with Bitcoin. So it's not just a purely circular reference system of one stock popping the other, closing arbitrages in the system. Fundamentally, it all ties back to Bitcoin. And that's kind of what breaks the circularity. But in terms of what you do to protect yourself, I think you just you have to have at least you have to have your own risk tolerances in place. You have to model out potential drawdowns. You have to model out not just say Bitcoin does have 30% CAGR over the next 10 to 20 years, which is how strategy models it out. Average 30% CAGR doesn't mean 30% every year. Some years could be down years. And so it really just needs to have contingency plans in place for all of the possible different outcomes to make sure that you're able to weather the storm, no matter what Bitcoin throws at you. And Bitcoin will throw things at you, as we've seen over the past 16 years. Over the past 16 years, Bitcoin has increased dramatically, but it hasn't been in a straight line. So, in terms of what specific internal risk controls they might implement, I think it would not be appropriate for me to speculate on, but I'm sure they have this modeled out well behind the scenes.
Okay. And is it realistic to be concerned with perhaps the market cap of the preferreds getting so big that the dividends become too large to service?
Yeah, I mean, there is, I would say, is there a point at which the burden becomes too big? I mean, yes, of course, if Strategy issued, say right now has, $70 billion worth of Bitcoin on the balance sheet, if they went out and they issued $70 billion worth of preferreds, they would have a big problem on their hands. But they're probably not going to do that. So what you're going to see, I think, is that, typically they, pretty much every speech Saylor comes out and does, he says, we're targeting, BTC rating of X on this product, whether it's 5X or 3X. Each one of these products has a target, coverage rating, and that is really what is going to set the upper limit for the issuance. And so I think that's really kind of the upper line that people should be looking at, is whatever Strategy says its target rating is on these products.
Okay, but as you mentioned, these are equities, right? People can buy them on the open market. So Strategy doesn't necessarily need to sell, new shares in order for the market cap to grow in size. New buyers can step in, buy these products. So I meant more so from that lens. If if these products become so popular that folks are buying more of the equity through the open market cap gets really large. Strategy. And not just Strategy, we don't have to focus on just Strategy, but, fill in the blank with your favorite treasury company is now on the hook for paying these dividends out. Could that be how do you solve against that problem, right? Because you can't just stop people from buying, the equity in the open market.
Yeah, but, just because, buying something in the open market doesn't mean that a new share was issued. The dividends that Strategy owes, depends on the number of shares in issuance, but they have control over that. People just go out and buy in the open market, but Strategy doesn't issue any new shares. That pushes the price. I mean, they bid the price of the shares up, but it doesn't necessarily create new dividend obligations unless Strategy actually issues new shares. So, Strategy is still in full control of issuance. No matter how popular these products get, the dividend obligation can increase just because the products got popular. Strategy still has full control over how much of the ATM they're using, and actually, if the products did get bid up, that actually creates a positive situation for Strategy. Let's say demand doubled for Strife, and price reflected that, price doubled. Well, now they're able to sell new shares at Strife, effectively paying half the dividend on it. Strife at $200 is effectively a 5% dividend. So that actually creates cheaper capital for Strategy. So I think, if anything, it's kind of the other way around. If these products become very popular, if they get bid way up, this creates cheaper capital for Strategy. And the amount of issuance, like I said, is fully under the control. So it's definitely not a concern that just people buying in the open market could create enormous dividend obligations.
Gotcha. Thanks for helping to clear that up. And wanted to talk also about share buybacks. So this is another tool that's available to treasury companies. We've seen Metaplanet and some of the other treasury companies announce a new share buyback program. And I think sort of what I'm wondering here, maybe some other people, is why haven't they tapped this yet? We've seen, as we mentioned earlier in the conversation, that MNAV multiples have gone below 1, and so at what point does it become the right time? Is it the correct valuation level to start actually buying back shares?
Yeah, I don't want to put a specific number on it, because that would imply guidance from our company that I can't, that we haven't publicly given. It would not be appropriate for me to do here. So, but to answer in a more general way, if let's say shares are trading at 0.9 MNAV, the accretiveness of doing a share buyback at that level is equivalent to the reciprocal. So if you do 1 divided by 9, the accretiveness of that share buyback is roughly equivalent to doing ATM at 1.1 MNAV. And so I think the question I would ask to people thinking about this type of strategy is, wouldn't you be happy if the company was aggressively running the ATM at an MNAV of 1.1x? I think for most people that the answer would be no. That if so, I think that the buyback below 1x has not really been well considered. And just to keep going with the example, a share buyback at 0.5x MNAV is equivalent to doing an ATM at 2x MNAV. So the MNAV really has to compress quite a bit to get accretiveness that looks like multiples that I think a lot of people would think are favorable to ATM at. There's still potentially an argument for doing it just to show the market that you're willing to do it, because whenever as we've seen with Jim Channel's trade, if you've got a particular arbitrage on and other people see that, they're likely to copy trade it and do some of the work themselves. So there's an argument for doing it at potentially less accretive levels, but it's something that the company would have to consider very heavily before doing so. Also, you have to consider the cost of capital. That, let's say you're going to use a credit facility. Metaplanet, they haven't disclosed what their interest rate is, but if you just go out and do a comparison on the market, Bitcoin collateralized loans typically run 8 to 10% interest rates. So you've also got to factor that in. And if you take out a 1-year loan at 8% or 10% or whatever rate you get to the share buyback, well, one, you've got the hurdle rate of the interest rate. And also you've got that principal coming due a year from now. So these are things to consider. It's I think definitely a toolkit that every Bitcoin Treasury company should be considering, but it's definitely not a magic bullet, I think, in the way that a lot of people want to think it is.
Okay. And Brian, this is exactly why I would want you running my my favorite treasury company. Great job with the numbers there and that example, that breakdown for us. Bringing it back to our earlier conversation about sentiment, because you did mention, it's not just in terms of share buybacks and other things that treasury companies might decide to do. It's not just quantitative, but there's also a qualitative aspect to it. So this may be a little bit speculative, but how do you think it would or could affect sentiment for a particular company? If they did come out and announce, hey, we're buying back shares at this level, maybe that pushes up price a bit and that could get things going. People might also see that as a way of the company stepping in defensively and might like that. So how do you think that could shift sentiment?
Well, I think there's a lot more factors to it. I think it really depends what else is going on in the market. If we're deep in a bear market, I find it questionable that one individual company trying to push sentiment in the other direction is going to flip things. Again, I don't want to be too specific here because it implies positions about H100 that's we haven't publicly stated, and I can't publicly say unless we do so. So the long and the short is, I think any company that is thinking about doing buyback should think about it very, very carefully. Should also consider what market conditions are like at the time. If defending MNAV into a steep sell-off in Bitcoin is a different scenario than defending than trying to defend a 1x MNAV in something that looks more like a bull market. There are a lot of different factors to consider. You have to weigh up. But like I said, just because of my position at a public company, I can't be too specific about what I think the appropriate ranges are.
Sure. Okay. Well, I think as we're speaking here, Bitcoin's a little below 100K at 90K or so. And so, last year at this point, it was also roughly at that level. But, since we're talking about sentiment here, the sentiment was definitely a lot different, shifted towards the positive side. Right now, there's a lot of fear, uncertainty in the market. Can you talk about what maybe the 100K Bitcoin price means for you? You're obviously in this for the long term. So how do you think about it, especially with all the short-term noise around, are we going into a bear market? Is this the end of the cycle? How do you stay level-setted and sort of keep that, long-term perspective in mind, realizing, that, just a year ago, we were all celebrating and cheering. There was a 100K Bitcoin party at this time last year.
Yeah, I've seen this meme that I thought was rather amusing going around it, showing last year the Bitcoin party. People always love to create these memes where like it's the same price, but one side everybody's happy, and the other side everybody's unhappy. So this one was like Bitcoin party with champagne, 100K party, Bitcoin party, 100K Bitcoin party, everybody with McDonald's uniforms on. I think the 100K level was very significant. That it was something that people have been talking about for the better part of 10 years. Even before Bitcoin was even $1,000, people had been speculating they could reach $100,000 someday. If you look back at the old Bitcoin talk forum, there were people talking about 100K Bitcoin. So it was, I think, just a huge psychological level. And there was a piece came out that I think. It was fairly thought-provoking, talking about how it looked sort of like Bitcoin was having its public IPO. And what he meant by that was that, typically, if you're an early investor in a company, you are illiquid for a very long time. An IPO might be the first chance that an early investor has in a company to sell for 5-10 years or more. And so when that happens, a lot of shares change hands near the IPO price. And even though some fundamentals of the company might be very strong, the business case might be very strong, demand for the product might be very strong, growth potential for the business might be very strong. A lot of times what happens is right after IPO, the price doesn't go anywhere for a while. And that's because a lot of the early investors who finally have a chance to take some profits, do so. And it takes a while to work through that change of the guard. And we saw a similar type of process happening with a lot of the pipe offerings that went to market. That's the Bitcoin Treasury space. It's the same type of dynamic with the pipe. That if a lot of investors bought in at $1.15 or $1.30 or whatever the price was, and the pipe unlocks, a lot of them were looking to take profit, and so the price gets stuck at certain levels until that overhang gets cleared out. And it looks kind of like that's what happened with Bitcoin at this 100K level. Is that finally, after all these years, there was enough depth in the order book, enough liquidity with the ETFs and all of the breadth of buying that there is now. There was enough liquidity for people who were holding 10,000, 80,000 Bitcoin to take profits and not collapse the market. We saw earlier in the year, a very old wallet. I think it was a 2013 wallet that had 80,000 Bitcoin sold, and it only moved the market like 4%. If you had dumped 80,000 Bitcoin in 2021, you probably would have crashed the market. In fact, that is pretty close to what happened towards the latter parts of 2021 into 2022. So Bitcoin is a very different place, and it's actually, I think, a very healthy sign that the demand is there for long-time holders who really couldn't take profit in size, who are functionally illiquid on their holdings, that they can take profit and not crash the market. And it's good for those coins to change hands because, I think it was probably around 2017, this article came out talking about how all the early holders of Bitcoin, just 10 years from now, they were all going to be in their Bitcoin citadels, and no one else would have any Bitcoin because all the earlies had it. Well, if you believe distribution of coins is a good thing, then you should be happy right now, because there's going to be a much wider holder base of those coins, and that should provide for a much more resilient ecosystem. But it just takes time to turn through and clear out that overhang. And once that is done, I think the fundamentals are still very much intact. Bitcoin fundamentally is long money printer. Unless you believe that governments around the world are going to stop money printing and contract their balance sheets, decrease the amount of fiat on circulation, reduce the amount of credit in the system, unless you think all those things that have never happened in history are going to be true over the long run, the case for Bitcoin is as strong as it ever was. But it doesn't happen in a straight line. The Fed has been doing QT, but that's a bump in the road. No one believes that the Fed's balance sheet is going to sustain at lower levels or decrease over time. If you talk to literally anyone, they think that the inevitable direction is back up again. The money printers will turn back on, and that liquidity will flood the system. Time and time again. But we will have these periods where that's not happening, where things are moving temporarily in the opposite direction. But overwhelmingly, the secular trend is towards money printing, higher central bank balance sheets, and that is, at least in part, one of the reasons why Bitcoin was invented. So, it was the first and really only truly decentralized hard cap currency where the monetary policy can't be changed by a few old men in a closed room in the capital city.
Okay, and so the structural thesis for Bitcoin is obviously still intact as it relates to money printing, liquidity, etc. But if large amounts of selling by these whales, does continue, how does this sort of square with the idea of never sell your Bitcoin, hodl forever? Do these emerging dynamics sort of risk weakening the overall Bitcoin narrative in terms of, continue to hold your Bitcoin, don't diversify into other things, if we're continuing to see these whales sort of offload and take profits here?
Well, I think it's a popular meme, and the characteristic, people always say hold your Bitcoin, and I think that's it is a good thing to do if you believe that where Bitcoin is headed is to be an integral part of the global financial system, with could potentially have market cap upwards of $200 trillion over the next 20 years, from the current $2 trillion, which is potentially 100x. In Bitcoin, if you think that these things are going to happen, yeah, it still makes sense to hold that Bitcoin. But at the same token, people have, individuals have different, time preferences. An OG who's been, the meme has always been no chairs, mattress on the floor, maybe one cup. Living is very Spartan life. At some point, people who have hodled their Bitcoin long enough just don't want to live that way. They want to have families. They want to buy houses. They want to have some creature comforts. And if their entire net worth is in Bitcoin, what are they going to do? They're going to sell that Bitcoin to buy those things. And that is, if Bitcoin is actually going to be a currency someday, that is what people should do. So you've kind of got this counterbalance of, yeah, save it because it's not really a true currency yet. It's more like a call option on a future global money. But at the same time, if it's actually meant to be money someday, then yeah, you're going to spend these things. I mean, people do that with their other assets as well. People just don't just hold assets to hold assets. They hope that they will increase in value over time, and they try to not, cannibalize their capital. They try to increase it over time rather than decrease it. But at the end of the day, when they want to buy something, they sell assets to buy it, or they borrow against the assets, or they do something. The point of the assets, it's what the assets can get you.
Yeah, no, fair enough. Maybe other than like Tesla, like you don't have people saying like never sell your fill in the blank. It's like Tesla, Bitcoin, but yeah, you're right. This rotation has to take place for people to live their lives and things like that. It's practical, but yeah, the focus should be on the the long-term thesis here and what's structurally in place, as opposed to what maybe what some whales are doing in the short term. As we sort of wrap up here, I want to tie some things together and shift towards the macro environment. So yes, 100K Bitcoin is important. This idea of the IPO moment, written by Jordy Visser, does seem to make sense when you think about it in context of what's going on with the whales selling right now. But from my perspective and from what I've observed, Bitcoin really moves around catalyst and news. We do have a couple things coming down the line here. I think the big one could be the Clarity Act. If that passes, it sort of looks like the big catalyst that could be positive for Bitcoin's price movement. We have rate cut coming down the line. Sort of depends on the tone of the Fed, right? Just because they cut, if it's a hawkish cut, just like the last one, doesn't mean the price will go up. We have QT that's ending in December 1st. That could be good, but it doesn't necessarily mean that QE is like right on the horizon or anything like that, or that we'll see the QE that we saw in 2008. We'll also have a new Fed chair in 2026, but again, you can't sort of take that in isolation. There's so much that could happen between now and then that we can't necessarily predict. We could be in a totally different climate. So as you think about, first, I want to get your view and take on, do you agree with that notion in terms of maybe the short term, medium term, if catalyst and news is what really drives the price of Bitcoin? And then also as a second point, I'm curious, as you think about these different potential news events that I mentioned, which ones are you more so thinking about that could sort of contribute to this this sentiment shift in both Bitcoin and Bitcoin Treasury companies, other risk on assets?
Well, I think particularly with news related to the Fed, that like I mentioned earlier, Bitcoin fundamentally is long money printer. So the any catalyst that's going to affect Bitcoin, I think, is going to go back to the fundamental dynamic. If there's more liquidity coming into the system, if there are signs that credit is going to be easier to get, if rates are going to come lower, in a more, or if the Fed is going to start injecting liquidity into the system and stopping QT, doing something that looks more like QE. People have some people have problems with calling things QE, but anyway, the broader point is if any of these things happens, it looks like more liquidity in the system and things start to stack up in that direction. Those are the types of things that on a fundamental basis contribute to the use case for Bitcoin, which is being long money printer. So that is really what I'm looking for, is these various things that could happen in the marketplace that could increase liquidity, or signal to the market that increased liquidity is on the way. And I think that is really what Bitcoin responds to the most, and what people should pay attention to in terms of thinking about what Bitcoin can be doing.
Okay, thanks for that, Brian. So as we close here, want to hit on this is a little bit more of a fun topic. So 444, that's a number we've seen plastered all over X this past year, and the date I think that was supposed to happen was either November 6th or November 8th. I'm not sure. But what's your take on what happened there? For me, it's a little bit strange, right? That this price target could be put out there. So many people could buy into it. Maybe even put money on the line when clearly wasn't very rational. You and I, we could call for 10 million BTC by next week, but we all know that's probably not going to happen. In a way, these sort of price predictions, they tap into people's desire for hope and something that could potentially rescue them financially. And usually that's not the kind of thinking that's very productive. So what's your view on what happened there? And I guess just make it a little bit more interesting too. It's clearly not happening this year, but what conditions would actually need to be in place for us to see 444 Bitcoin, basically a 4x from here?
Sure. Well, I'll make two comments on that. One is just about price predictions in general. I try not to make them because this is something that I kind of went through as someone who started being more public, even before joining H400, being more public, talking about my views on Bitcoin. I think that the way price predictions tend to work is that whoever can come up with the biggest one and provide at least a somewhat believable narrative behind it tends to get a lot of attention. And so there's a tendency towards really high price predictions just because they get a lot of attention and a lot of engagement, and that drives social media algorithms, which is a dynamic I don't like too much, even though I am extremely bullish on Bitcoin. In terms of 444 in particular, what would it take to get to a $444,000 Bitcoin?
That exactly.
What it would take to get there exactly. I think we probably to get there, sometime in the next 6 months, you probably have to have QE on full tilt. Slash interest rates to zero. Fed, increase its balance sheet by 40%. Basically a repeat of 2020 type market conditions. That's probably what it would take for Bitcoin to get there. In the next, say, 3 to 6 months.
Okay. Oh, please, Brian.
Anything short of that, I'm a little bit I'm a little bit more conservative on.
Gotcha. All right, Brian. Well, this is fun. I can't believe an hour just flew by like that. But yeah, we got through all of the key topics for this week. As we mentioned, this is something new we're doing here over at Proof of Thought. This live show, and Brian's been kind enough to come on the show as our first live guest, and we'll be doing a weekly series together on Wednesdays, 11:30 a.m. Eastern, so same time as today. So we look forward to having you back on, Brian. As we know, a bunch of things happen throughout the week in Bitcoin land and Treasury company land. So I think we're going to have a lot of exciting things to talk about. And sentiment isn't great right now, but hopefully we're catching this tail end, and as we continue this, things will hopefully smooth out a bit, and we'll be able to come on, be very cheery. So in short, thanks again, Brian, for coming on for the first one, and looking forward to our upcoming sessions together.
Yeah, pleasure speaking with you, and very happy to be doing this series. I think it's a lot of fun, and it's surprising how quickly an hour flew by.
Absolutely. All right, take care, Brian, and thanks everyone for joining us.